In this video, traders are going to look at trading Bitcoin and how we can simplify our charts. Stay tuned. Hey traders, very warm welcome to you. Right, so cryptos, hot market. I know a lot of you like to trade cryptos out there. I confess I'm not a big cryptocurrency trader, but I really love to see what they're up to because it's a pure example of supply and demand. I love to watch the charts. I love to kind of delve in, look at the levels, look at how it's trading. So I know why you guys like to trade it. I can perfectly understand it. Okay, so what I've noticed with Bitcoin specifically, and there may be other cryptos, but Bitcoin's what I want to cover in this video, is that it's very strict almost in the way it adheres to certain levels. So certain $100 levels, $200 levels. And so there's a way that I think you can simplify your process, your decision-making process, and even the way you display your charts so that the noise doesn't get to you too much. Because you've probably got a high-priced asset like Bitcoin. And we've seen it sometimes before with other instruments when they become very high prices. It becomes very challenging sometimes to not get caught up in the noise. You look at every dollar move, every $10 move, every $5 move, and there's so many of them that really you don't know whether you're coming or going. Is it bullish, is it bearish? And you end up getting too far down, too microscopic on what you're looking at. And actually, sometimes the roadmap is clearer when you take a step back. So what I'm gonna do now, let's go to the screen. Let's look at a Bitcoin chart and let's have a chat about it. All right, guys, so on the screen now, I'm on a Bitcoin chart. I've got a 1 hour setting. And one thing I've noticed with Bitcoin specifically is how well it adheres to $200 levels. So in other words, you know, if you're looking to trade Bitcoin, rather than drawing your support and resistance lines at this kind of level here, always draw out a multiple of $200. So if you frame, what I've got here is I've got my scale as well set to $200 increments, just the way I've just zoomed it in manually by doing this, but in some charting packages you can lock it like that. And basically what you're doing is, if you're trading it in $200 increments, that's how you can view the whole market itself. So not only can you say, right, well, I want it to go long at 10,000, okay, and I have a $200 stop or a $400 stop or a $600 stop. But let's say, for example, you've got a $200 stop. So using a $200 stop, and then you're using a multiple of $200 in your target. So you're using $600, say. Let's say I'm using a 3-to-1 risk-reward ratio. Very simple then to frame your trade. You know, as the market's coming down to this 10,000, you're like, right, I want to go long at 10,000. I have a $200 stop in the market, and I've got a $600 target. Bang, 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 you're out. I want to go short at 11,000. I'm on a $200 stop, and I'm going to cover it at 10,400. Bang, 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 or 10,800, or $1,000, whatever it may be. And so, if you go back through time here, guys, and this is not just like a modern occurrence here, if you go back through and look at all of the situations you're trading, very often, and listen, are you going to get stopped out? Of course you are. You know, this is not a guaranteed thing, but being able to stop looking at the smaller levels like the $50 level or the $100 levels and waiting for it to hit a $200 level, i.e. 200, 400, 800, you get the point. 200, 400, 600, 800, you get the point. If you're looking at in those increments, it smooths out the noise a little bit better because you're not that interested then if it's doing 12,300. You're more interested at 12,400. You're more interested at the whole number. You're more interested in this. And you can go one step further, guys, and you can also, if you wanted to, do it in terms of 500 increments. So rather than 200, you do it in 500 increments. You go, right, there's my scale there. I'm only going to do it in 500s. I'm going to look for multiples of 500s. So if you're on a higher time frame, perhaps on a 4 hourly or an hourly, that's how you would frame it. So the point is that rather than just looking at Bitcoin and going, listen, it's all over the place, if you bracket it and say 200 is a great thing, I've been looking at our $200 chart increments. I've been kind of measuring the moves based in $200. It's so much easier to frame your trade because your stop can be in increments of $200. Your target can be increment in $200. And it makes more sense than trying to calculate, okay, so it's 10,452. It's this, it's that. No, it's a simple moving from $200 to $200. And also, guys, if you've noticed on the chart, it does move in these chunks. It moves, it moves, it moves. It's very good at sticking to whole numbers. Bitcoin's very good at that. Oil sometimes goes through phases of being very good at the whole number stickiness, and Bitcoin is the same. It moves the whole numbers, and it either tends to kind of move quickly to the next 200 or it rocks back from that. Now, does it always rock back, you know, a good trading amount? No. But if you know it's moving in blocks of 200, or if you're perceiving it as that, and if you're framing a trade as it moving in blocks of 200, then life becomes a lot easier for you. So, okay, 5 blocks it's moved. Okay, I expect it to move 4 blocks back. And so it's a clearer roadmap for you when you're trying to position your trade, you're trying to quantify your risk, you're trying to place your stops. So try that out, guys. Try the 200 block approach. A $200 block approach. So you're only initiating trades around that $200, $400, $600, $800, etc. You're using that as a multiple for your stop, multiple of that for your reward, and you're just viewing the price action in terms of how many blocks it's moved. And that might make it a little bit clearer for you. That might remove the noise which Bitcoin's so renowned for. And of course, because it's being so high priced, that's why it's so noisy. Try it out. Let me know how you get on in the comment section below, and let me know if it works for you, or if there's a little tweak that you've got an idea of how you can adjust it, maybe the $500, maybe the $1,000 if you're going on a higher time frame and looking in chunks of $1,000 moves, maybe that works for you better. But all comments in the comment section below. It's interested to hear your feedback on this one, guys. All right, guys, take care. See you in the next one. Whatever you're trading, keep the risk managed and be very careful how you trade. Bye-bye.